Here we are. Uh-oh.
No, I'm kidding. I'm fine.
Oh, okay.
Based on my last few videos, that's pretty typical. I learned doing the video with Cole that yeah, if you want to play audio like YouTube videos, you have to do a separate function of StreamYard than just showing the web page.
Oh yeah.
You have to go out of showing. So this is just showing like a web page. You have to go out of this, and then you have to specifically select a tab. It's separate, so you have to flip between them while you're fucking doing it.
Yeah.
I'm sure there's a better way to do it, more expensive, some service that probably makes it easier to do it, but here we are. So
it's all good. Yeah. People know that you're doing this for fun and are still, starting off on this, and improvements will be made along the way.
Yeah. I should do buy alerts like strongman. This week my 403b, I put 3% of my salary into it. Like, what am I going to show? It's 50% S&P 500, 20% Russell, like mid cap value, and then it's 30% of what do they call it? Australasia, Europe.
Oh yeah, yep.
I mean, it's like, oh yay. I mean, so I avoid China, and I hate to say it, I kind of avoid Canada too.
Dang! There goes the moving bus.
I don't know, sue me, but yeah, my international is basically Europe, Australasia, which people don't know. It's like New Zealand, Australia, Singapore, Hong Kong, Japan, developed markets. So I think emerging market, pass on it.
It's quite funny. I imagine then, like, if people were expecting sell alerts, that you might get old to the point where you forget. As far as like, oh yeah, I'm drawing down. Like at that point, you're probably just enjoying life. Like,
yeah, half the time I didn't pay attention. So maybe Jesse from Stone Cold Investors will come on. So we put the invite out. We were gonna do something yesterday, and then I realized football was on, and I'm like, I'm not fighting football. Like, yeah. So my normal Thursdays, I'm gonna have to rethink. So maybe it'll be just Monday, Fridays live stream, but then Mondays is football too, I guess.
Yeah. So it's just gonna be Fridays.
Yeah,
Fridays when you can.
Well, I don't really do much on Fridays.
Nah, it's all good. Neither do
I. Go
I.
to the gym, and then I hang out with family. Yeah. So we determined that Canadian dollars are car wash.
Oh no.
Chinese currency is monopoly.
Oh no.
I don't know, but like yeah, pretty much actually. Yeah, one's fake money and one is faker money. Well, fake stocks. One's fake money and the other one's a fake stock. So there you go. Invest away if you want. I don't know. Only invest in demographic pyramids, bro.
Oh no.
Sharp demographic pyramids. That's it. If there's no pyramid, you're out. Get out. Oh well. Okay, I've wasted enough time. Oh, look, it's goldfish.
Goldfish.
I kill time in the beginning to see if people catch on. So.
Yeah, I know. I just made a GIF moment.
All right. Well, anything fun this week? School or
yeah, I was gonna say for me, real life, school and work. My school has got a little investment club with a little competition. I signed up for it again, and we'll see if I earn myself an Amazon gift card through sheer dumb luck, or if I embarrass myself. Because last time I did pretty well, got a gift card. This time we'll see if I humiliate myself.
Oh yeah, we'll talk about it a little bit. So on what was it last week, the strike talk? I said like I didn't want to talk about it much because what's the point of talking about a strike before they could make a deal? Like they can make a deal 5 minutes before the deadline, and then what's the point of talking about it? So, but Bill, the only thing with the writer's strike I found interesting was Bill Maher is like crossing the picket line.
But
Bill Maher is going to bring back real time. I don't know if it's tonight or not, but
Uh-oh.
uh,
Uh-oh. Is the man gonna get super canceled?
wait, how do I get to it? Twitter.
Yep.
All right.
Yep.
Yeah, so he is crossing the picket line. Dun, 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 dun. Look at
Yep.
that.
Uh-oh.
So it's interesting because a lot of people are calling him a scab and a hypocrite
Yep.
because he's crossing the picket line basically to start his show up. But he's not going to have writers, so the show's coming back. How the hell is he? He's not going to have his monologues and stuff like that. So I don't know. But
See how
you
it
know,
is.
they always pro. Oh, you know, oh, I have to do it for my team because they need the income. It's like, okay, whatever. You
Yeah.
just want to go back on television.
Yep.
But that's how the unions fail if they don't stay together. Um, but I said I don't think the SAG writer strike's ending anytime soon.
No.
Nothing's changed.
No.
That they're fighting for their future. I'm
Mhm.
not even trying to be dramatic. Get it?
I see what
Ah,
you did there. I see what you did there.
ah,
There's the real
pun-
value add community.
yeah. Puns are free, people. Puns are free. But they're fighting for their future here. Like, um, this could go on for months, I think. The networks will have to change the structure of how they do these shows because it's going to cost more
Yep.
because they got to pay what they should be paying,
Yeah.
streaming wise. So if you have streaming investments, people, you know, take that for what you want. I don't invest in streaming companies. Don't like it. Not
Yeah.
interested.
I don't have direct like meaningful exposure. I was interested in WBD for a time there, but
But that's a great segue because
yep.
now we're going to talk about non-streaming broadcast television, which is what you're all here about, is awesome broadcast television news, isn't it?
Oh yeah.
So tell us all about the contract breakdown. Go ahead for it.
Oh, for me.
Yeah,
You know
break it
more
down
about this.
for us.
You know more about
Charter
this than I
Disney.
do, but like
What happened?
the important thing though that I like based off of a very quick glance, it's a great deal for the customer of Charter, and I think that this is living proof that as much as people love to poop on cable companies, they're far from dead. Like they still have another act to play out, and said it before with Comcast. I don't think that this next act will be necessarily as profitable as it was as some of the things they've done previously, but
Mhm.
dead? No, no, no.
Because I think Charter, basically the CEO, I listened to some of what he said during
Yeah,
this because this went on for a few weeks. I don't know if people were following this news. You said you weren't really,
no.
but this was a big deal, I think, because the Charter CEO wanted to change the face of how cable companies make deals with the broadcasters. He
Yep.
wanted to totally rewrite how they deal with them because in the past you had a package of television channels
Hmm.
and you sold all of them.
Yeah.
So Disney was like, you don't get to pick. You're
No.
going to get Freeform, ABC, ABC Kids, uh, all the Disney channels, like 6 of them, and ESPN, all their like 5 channels of ESPN. Tough shit. You
Yep.
get all of them, and you're paying me all of them. So in the heyday when everyone was flush with cash and
Yep.
subscriptions were going up, they didn't care, right?
Yeah.
What does this sound like? It sounds like streaming.
Yep.
So
It definitely does.
yeah. So in the early days, it wasn't about being profitable. It's like they were all growing, but then it matures and now Charter's like, all right, like we're gonna rewrite this. Like, I don't want to pay for all of Disney's channels
Yeah.
if they don't provide value to our customers. And then the other big part of the deal that he talked about was he was like, why do I not get a piece of all this streaming services that Disney is creating? Disney, so it's like I pay Charter's like we pay all this money for ESPN and ABC and Freeform, but then here's Disney spending a fortune on building out ESPN Plus, Hulu, and Disney Plus, and we don't get any of that.
Yeah.
And he's like, "Well, that's bullshit. Like we want all of it. We want to pick what channels, and
Yep.
we want a piece of that streaming action for our customers." So, and that's what they were fighting over, from what I
Yeah.
could tell.
Oh yeah.
Um,
Yeah. Because I believe like one of the headline bullet points was something like $3 for Disney Plus for Charter's end customer or something like that.
yeah, So you can see some of what they talked about. A sticking point for Charter was permission to offer Disney streaming service as part of its packages, not an add-on, like you can buy it in addition. They wanted like, okay, if our customers have Disney and they're paying for it, we want all of it. So they wanted the Disney Plus, which before the ad tiers, I don't think it was really possible to really ask for it. But now that there's ad tiers, that's the part I think they were waiting for the streaming services to have, because now they can fully monetize these channels. Oh, wait.
There he is. There he is. We all have hats on. It's an all hat stream.
Gotta make sure my mic is right.
It's a hat show.
Yes.
Hat trick.
Hat trick. Yeah, with 3.
Hat trick.
Mine's got a lake on it, just for Jesse. No.
All right, let's go.
Not the lake you hiked to, but
So we're talking about Disney?
Yeah, Disney Charter.
And Charter. And Charter.
Oh man. I think like Charter bit off a little bit more than they could chew with that one. Like they think they have leverage. Not really.
They made a deal though. They made a deal that like
not in my eyes
on paper. Really? Like at least on paper, it seemed like they were passing on.
They did. What was the deal? This is news to me.
So they're going to get Disney Disney Plus as part of their subscription package for their customers. Also, they are not paying for Freeform. They kicked that to the curb. So they broke up the package, and they're getting Disney Plus and ESPN Plus, I believe. So, but they are paying an undisclosed increased price to Disney, which was interesting. So we don't know if they paid what Disney was asking for the rights. So, but I think the important part is like the concept of the cable package. They kind of broke the mold on that. So the question is, will the next, who's up next, right? Will they be able to replicate this, or will it just be a one-off? Like, is Fios up next, or what's another big one? Comcast, yeah. So one is not a deal. If like 2 or 3 of these in a row can break these packages and say, we don't want to pay for 10 channels, we only want to pay for 5, and then we want your streaming service for free. And then we want to share ad revenue. I mean, this is where this could be going. It's like revenge of the broadcast networks. They're fighting back almost. Finally, you can see, right?
Just out of curiosity, do either of you guys have any positions in cable companies or no? Because full disclosure, I don't have any active ones. I held Comcast for a little bit not that long ago as an experiment.
I have Nexstar Media. As a position.
Already. Okay. Yeah. So there you go. There you go, viewing public. You can't say we have, blatant conflicts of interest, because at least we're honest about it. It just seems like whenever there's a deal that the end customer gets something nice out of it, at least on paper, it seems like the customer got something nice out of it from Charter's perspective, or the Charter customer perspective. Like, it seems like this was meaningful enough to Charter, at least. Like, I could be reading it wrong, but
yeah. So what do we see here? Disney agreed to drop 8 of its less viewed channels, signaling the end of bloated cable TV bundles. So we've got that. We were just talking about. They got ESPN or Disney Plus ad supported as part of their service.
I think we may have lost Jesse, by the way.
Oh, no.
Yeah.
Yeah, I saw him blipping in and out, and then he disappeared. No. Wait, let's see what happened.
Yep.
He said computer crashed. He'll be back.
Oh, dang. Okay.
Yep. So I mean, is this a huge win for them right away? I mean, like I said, we'll see. Can we, I'd be interested to see which one's next, because if you get 2 of these deals in a row, it doesn't necessarily even have to be Disney. It could just be who's up next for making a deal. But if they can break this mold of because that was the historic way. The more channels they had, the more money they'd get from the cable providers. And I remember in the 90s, it was like, my God, there was like 6 ESPN channels. There was like 5 ABC Disney channels, Nat Geo Kids, right? So it was just more channels, more revenue, and they would just get more money. But the tides have turned. So
yes.
So that model seems like it's broken. Charter saw the Book of Boba Fett and they thought they were at Cold Stone Ice Cream. They said, "Love it, gotta have it." I am watching Ahsoka. I will say, I watched. I was a Mandalorian fan. I haven't watched any other of the Disney Star Wars things. It was just Mandalorian, which kind of pissed me off the last season, but nonetheless. Yep. And then I like Ahsoka. Like, I don't love it, but it's fine. I don't know what else. It's fine so far.
It's all good.
I mean, there's only so much they can do fan service is what's killing me about Disney, because all they're doing is just doing fan service and rehashing what's already like stuff that's already lore. So like I'm waiting, like when is their new stuff? Because Ahsoka's kind of just rehashing Clone Wars, and at some point they need to go into new material.
Yeah.
Like from the books, which they seem to be so against doing lore from the Star Wars books, because I don't know if they own the rights to the books or not.
Yeah.
So I'm not sure, but maybe they just don't want to because their writers refuse to just follow some book from some amateur writer. I don't know. some books I read a few of them.
Yeah,
they were good, okay, goodish.
Yeah. Some of them were like perfectly good short stories or like collections of short stories, and others were all right enough. Like, yeah.
But they always want to put their spin on things.
Yeah, of course, certainly. But no, this actually like is intriguing to me. I may have to look back into this.
So here's Charter's communication. They were talking about what they got. Key points of the deal. So we said ESPN or Disney Plus ad supported, provided the customers who purchase Spectrum TV package wholesale arrangement. ESPN Plus will be provided to Plus subscribers. So I'm assuming you have to pay extra for ESPN Plus.
Yeah.
Which I'm not that surprised, because they're going to charge, they're talking $20-$30 a month for ESPN Plus at some point as a standalone direct to customer. That plan is, I have some doubts on that, but so what else? ESPN flagship, here it is, direct to customer service will be made available. So they're like, look, Disney, you have all these huge plans about ESPN becoming a direct to customer service eventually. We want in on it now. So, is he back?
He's back.
I'm going to kill my computer.
Is this really why you're bullish arm?
Yeah.
You started glitching like
10 years old.
Oh man.
So they got ad-free version of Disney?
Ad supported.
In the coming.
Okay.
And
they got ESPN. They got ESPN's Plus, but it looks like it's a premium, so it's like an add-on.
Yep.
And then ESPN's direct to customer service will be made available to customers when they launch it, I guess. So they wanted to preempt that before it went fully active.
Interesting.
Mm-hmm.
But I think so. Investing wise, this probably begs the question: are broadcasters back on the menu? I guess if they ever were on the menu.
No.
Oh, ouch! Immediately, no hesitation.
No.
Punish them.
Like I
don't like I used to work for a company that was an ISP and also like a cable TV provider. They don't have leverage at all. Like it's really hard. Like I think most likely all of the broadcasters are just going to get shipped away. The companies that are going to have the best leverage with like cable TV or is going to be like over the top internet based streaming services like a YouTube TV. Like
yes,
it's they're just and Google doesn't need to make money off of a cable plan, right? For YouTube TV. So they can easily offer it like at cost. Like Amazon could do the same exact thing if they wanted to. I think like the larger tech players that can build up a huge customer base and they don't need to actually rely on that segment for actually making a profit, they're just going to destroy the the traditional cable companies.
I mean, I think, I don't know, it was a live stream a while ago, and I was like, maybe it was with Capital Mindset, but it was like, who do you think will win if you were to pick like the online services, like if there was one to win? And I think, yeah, this is the front runner. I would say would be YouTube TV at this point.
If I'm looking at a broadcaster or like cable companies, I'm much more interested in their ISP offerings, like their cable internet offerings, because it I know for a fact that those are typically much more profitable than like the cable packages they actually offer. So like your fiber internet or your DOCSIS coax internet, like cable internet, being delivered to large apartment buildings and stuff like that, that's going to be way more profitable than relying on these TV cable packages.
But so, is YouTube TV really getting a good deal, or are they just saying, yeah, we'll just buy your whole bundle, we don't care, we're not like relying on this cash flow because we have our other businesses at this point?
Oh, I think that's exactly what they're doing. I think they're like they're using their leverage with how much users that they could potentially have, and as those users grow, they're going to use that leverage, and they're going to basically just negotiate with the TV channels or the channels that are the most popular, and they're going to just put together a pretty solid bundle, and they're not going to care if they make money on it or not, right? They're going to try to entrap people into their ecosystem. So,
I mean, I got a deal from Amazon, sent me a promotional deal for the NFL through my Prime membership. I don't even remember what it was. I don't want to pull up my emails. I screwed that up.
Was it Sunday Ticket? Was it NFL Sunday Ticket?
It was
I think I saw that.
Wasn't like $100 off, or so I'm like, that's interesting how they're doing that.
I mean, don't know. It's not. Comcast kind of interests me. But I'm not interested in those companies at all for like their TV offerings for like that segment of the business. Because what's interesting though is like all of the plant that they have, like the DOCSIS cable modem coax plant. Because once you get that infrastructure built out, like that's where you're going to make most of your money, is just on those internet.
The internet portion of their business will do really well because you have to have the internet, and you have to have more internet to stream all this. Your cell phone ain't going to cut it.
And they're not going to be able to offload all this onto Starlink or something like that. If you think that that's not going to be the case, just because Starlink isn't going to have the density, the capacity to take that type of traffic, especially when you get into more dense like cities, really any city. The capacity of like a DOCSIS, like, I don't know, DOCSIS 3.1 node is so much bigger than I think I did an analysis on like maybe like a trail of 10 or 20 Starlinks. It like wasn't even close. Like so yeah, I think they're going to be a really good play for just overall internet usage growth and being able to upsell as more and more things move to like over the top internet, like TV streaming services. But what I would probably be looking at is the plant that they have, the ongoing costs involved in the plant, their internet subscriber base, how they're growing the services off of that internet subscriber base, and how they're basically the rate at which they're growing their revenue off of that, because that's going to be That's going to be where like the long-term bull thesis I think would be.
So this is like, so Charter's like in the Empire Strikes Back right now, and then the streaming services are going to be in Return of the Streaming Service, and they're going to blow up the Death Star.
Oh, I am intrigued. Like I get what you're saying from especially from like my dumb brain of like I like to think in broad strokes. And I agree with your assessment.
Not dumb Bacon. Come on.
No. This is me we're talking about. Let's keep it honest. Like I know I am the sucker.
No, you're not.
No, in
dude,
this case,
you're a
like,
lot smarter than a lot of people I know.
I like. All right, so in this case, it's not my space. Like what I'm getting at is I know I'm the sucker at the poker table. That being said, though, like I think it's okay to say give me a quarter or two to see how this shakes out and how it plays with the numbers if it does at all. Yeah, because like that was my thing with Triton. Like I hate bringing Triton up on your channel, Dan. But
hey, we did good with them.
Yeah, like it was an old well established boring company that and business that changed the business model. And granted, yes, this is not necessarily the core of the business model, but the change in the business model can be just as innovative and productive as much as some, companies that claim disruption like to try and play themselves off as. So this is my bias showing, and this is probably how I'm going to play it to the people that care. Is I like things like this. Mature, established business company. If there's a business model change, let's wait and see how things shake out. Maybe it's good, maybe it's bad.
So this is my only play, but it's not about like broadcast streaming rights. So
yeah.
I was preemptively in this because of the basically for next year's election.
Oh yeah. Oh, JC is gonna hate this.
No, we're in this to win it.
Yeah, but he went from quietly saying, "Oh yeah, this is great, and then quietly is like, as if anyone mentions it, he's like, "What the hell are you doing? Shut the hell up!"
Yeah, he's gonna kill me. Actually, I'm gonna turn this off. But no, I think it's a play. It's a play on momentum and short term.
Yeah.
They're gonna get a lot of inflows of political contributions for ads. But, and I think it's a well-run company anyways, but so short term to me is like 2 years or less. So I added a little when it dipped because of the Charter fight. Actually, it dipped, so I lowered my cost basis a bit. But
very cool.
So we will see. But it's an interesting time. They might fight back, so they might fight back and claw a little back the broadcasters, and then lose in the end. But all right, without any other thoughts, or I guess we can. This is kind of a quick topic. I know Jesse loves to talk about oil.
Macro.
So. I was just gonna say I am interested in like Comcast. That's one that I've watched here and then there.
Did you the Mario, the park they opened has been very popular. I've seen, I think for attendance, the Mario Park in Universal. Yeah.
Ooh.
So they might actually do it right. I hope they don't screw up Mario. But, there's some gold there.
There is a chance for sure. Yeah.
And they cut their contract with Dwayne Johnson. So
oof.
I'm happy
See how
about
that goes. See how that goes.
Yeah. If you like him.
I just know he's a big name. Like he's been able to make big moves.
So Jesse, I don't know if you saw, we talked about this like June, I think, Bacon and me.
Yeah.
But I said
I did see that.
I said the second half of the year, I think energy is the play. So toot kind of right. It's gonna get that one.
Victory lap.
Damn it. It says now. But basically, like you could see Russia, basically the Saudis hate Joe Biden. I don't know why they hate his guts, and they're gonna do things to hurt him, like cut oil supply to raise prices, and then so part of it, and then you could see here. Well, here is the oil rig in operation in the U.S. So you can see. Sorry, this is so small, people. But we're at like historically low levels of freaking oil rigs in operation right now. It's been dropping all year. So they're not running new setups in America. And then I mean, here is the strategic petroleum reserve. Just keeps going down. So at some point, all these things have to come together. To me, it was just higher oil prices seemed like they were on the writing on the wall. So
yeah,
I think it could get to 100. If it got to 100, I'd probably bail on my oil play. But
I would probably have to sell Musa at that point, because Musa would probably be at like 400.
Mine's been pretty good. So I have XO. Long term, I have ConocoPhillips. I haven't added any to it, so it's done pretty good this year.
Oh,
up 10%. Okay.
Yep.
And then I like this company much better. That's not a word, but I'm a clown. I mean, if you bought it here, and then sold it up here, time it all, man.
Just buy the bottom, sell the top.
Yeah. This was more play on like liquefied natural gas for me. They have higher quality wells that are in reserve, I think. So they're just better long term. I think they're a better company than some of the other ones out there, the way they've situated themselves. But my short term play was XOP. So I bought it at like 142, I think. So far, so good. I don't know. Like I said, if oil hits 100, I'll probably bail on it and then move on.
So you're saying oil is the next AI play?
Ooh.
Everybody's
you really think though, like AI
I need some oil reserves.
Wait, what are they? The Palantir Tesla people now are calling themselves like Teslantier, some stupid word they made up.
Oh, jeez.
They're not buying oil. It's like that would betray their ESG hearts, right?
Palantir Tesla.
Yeah, Tom Nash I saw made up a word, so he calls them like Teslantiers or something, or I don't know. He merged the words.
How could we mix that up? Palantir Tesla.
Some hedge fund. Some fund manager. Yeah.
I'm gonna call him Tepsies.
Let's see if I can find it.
Some fund manager. we'll make this happen. No.
No. Okay, hold on.
Don't do it.
Or is it Tom Nash? I don't even know if I sub to him. No, I do not.
You're good.
You gotta do this in a separate screen and then bring it over.
Yeah.
Father, husband, University of Michigan alum.
Oh, I thought he called himself Father Nash. I was like, that's interesting.
All right, what do you think of this? You're gonna buy it? Go.
Oh, jeez.
So is it gonna rust?
It's stainless steel, supposedly. I don't know.
Okay.
If this thing is 50K, it's game over.
I can tell manufacturing flat panels of stainless steel like this is a disaster.
My biggest concern about the Cybertruck is that it gets shelved for safety issues, because I don't see how they can design good crumple zones for other people into that vehicle.
Yeah.
It's gonna be like a moving brick wall. I feel like it's gonna kill so many people. I feel like it's gonna just get like taken off the road. They're gonna be like, hey, no.
Oh, here it is.
Stop it.
Yeah.
They're
Teslantier.
And he hashtagged it. Wait.
Oh, jeez.
What kind of abyss is this? Oh my god.
Oh my god. Oh.
I hate. If I just want to you hashtag this. I hate you. Just want you to know that.
Allegedly, and then this, I want to say, like, I've heard this this being the case for years. Don't know if it's true or not still, but like if you use hashtags in your tweets, like the algo is actually designed to punish you. but I could be wrong. I don't even know anymore. That just God, the hell.
Unless it's Tesla and Tier, because
Tesla's,
Elon's
yeah.
he whitelisted that one. He was like, "Oh yeah, that's a good one."
Yeah, that one.
Promote.
We need to juice it, goose the algo.
Wait, what is PBR?
Petrobras brass.
I thought you were talking about Pabst Blue Ribbon. But,
Oh no,
I was thinking that too. I was like, "Yes, it is."
I'm like, yes, it is. It was the best-selling beer in America for a while, like 100 years ago.
Good old PBR.
Yeah. Oh, interesting. Oh, I know this company.
Yep.
I'm not the one to talk about Brazilian petrol companies.
Yeah, that one has a reputation.
I mean, I don't know if there's much left in the oil, like more like now investing in the oil trade. I think the oil trade was, sorry people, it was in like June, maybe early July. When you saw the cuts from the Saudis and then the strategic reserve being low and the US production wasn't going to ramp up. So that was kind of the time. At this point, I think you're just FOMOing into it kind of, because it might not hit 100 is rough. Like,
what's the current trade then?
Charter communication.
Charter.
The current trade is investing in yourself and liking this channel.
Short oil.
Yeah.
No, don't do that.
Don't do that. Don't do that.
Wait, what would most say? US oil or whatever?
You'd say jets.
Yeah. Yeah. There you go. It's going to work. Oh my God.
Talk about the Tesla truck, the Cybertruck. Yeah.
Oh, they had panel issues with the Cybertruck already, like the door gaps. And I just tell people, like, there's a reason why they haven't made stainless steel vehicles since the DeLoreans, which failed. People forget DeLoreans were an abject failure. Just because they were in Back to the Future doesn't mean anything. Like,
but
there's a reason why stainless steel is not the use of the shell of choice for cars. So.
Yeah, I do jokingly say that my dream car is a DeLorean with a flux capacitor. But...
They look. I don't even want to. I wasn't going to get into it here, but like the actual, like the pictures of the Cybertruck compared to like what people are seeing on the road.
Yep,
it looks like crap. Because now you have to put the mirrors for safety. The headlight taillights have to be the certain way, according to the government. And then the wheels don't look like what they put in the prototype promotional photos. So I don't know. Kevin thinks it's going to become the best-selling truck in America. So good luck to you there. So I doubt it, but
but yeah. That's why people hopefully enjoy this channel, is to try and hopefully not lose as much money. There we go. There's the tagline.
Current trade for oil. I mean, I think any oil company in America that has, like, this is my opinion, but like any sort of natural gas that they can get to the Texas coast where they do liquefying and get it to Europe long term is an interesting investment. So I don't know. People have to do their own research, but because I don't think that's going away for a while. I mean, we're going to be exporting liquefied natural gas for a long time. So. But anyways, should we talk about the strike?
Yes.
The strike.
Yes.
We got to save time for ARM, because I know Jesse. Let me cut that out. So
ARM.
It is interesting. It is interesting. I'm just not the greatest person at that. But so basically, here's another big fight, kind of similar to Disney Charter. Everyone wants to fight now.
Yes.
If people are like, why is all these unions fighting and stuff? Well, I mean, all right, like this kind of sucks for people in in America. Here's the CPI for in cities, things got more expensive real fast. So the unions want to fight about it now. And then UPS knocked their deal out of the park. So the first union, the major contract, was a great success. So now all the other ones want to do the same thing. But basically, from what I saw, like the pay raise stuff, that'll get hashed out, because they don't mind paying more percentage. The like Ford and GM want to pay like 20 or 17% over the contract. But the big thing I found was that basically the UAW gave away concessions during the Great Recession, and they want to retract that at this point because they see the profits that Ford and GM and Stellantis are making, and they're like, look, we gave you guys concessions to survive, but now we want those rights back. So they want, like, they lost cost of living adjustments, used to be a hallmark of their deals for 75 years or whatever. They gave that up in 2007. They also created a different retirement tier, I guess, that was not a pension based, but a defined contribution based into like 401ks. So they want to retread. That's not probably happening, but
no, probably not. But
they want retirement health care fully funded. They're going big in their demands. So.
They are swinging for the fences. Let's see how much contact with the ball they get and what ends up shaking out.
Yeah, they want to work a 32-hour week and get paid for 40 hours, which I don't know how you're going to word that, but I guess they've been working 50-hour weeks and they want to stop that. So these are things beyond just pay raise issues. Because everyone knows, of course, they want more pay. These are things they're fighting for beyond that. They also want a say in plant closures and the future of the companies as EVs are developing, which that's probably the last thing they're going to get, honestly. But
so they want to work less, make more, have better benefits. You just got to throw it at the wall and see what sticks.
Yeah. They got a new president, and he wants to fight. They went really big on their demands, which is very interesting.
Oh, look who's in.
Uh-oh. Wait, how many sakes is he into now? Yeah, Fabio's a mod. He didn't.
Yeah, he's got a wrench.
I mean, it's the least I could do. Jesus.
Yeah. No, Fabio, no! Don't ban people.
He's gonna ruin all this time he was waiting to sabotage me.
Yeah, he's undercutting you.
My under 200 subs. Oh no. Fabio, what have you done?
Fabio, no.
Remember me, Jesse. Remember.
Fabio's like 0 viewers.
Fabio bans Kingdom of Finance. Drama ensues.
So any other, I guess, I don't know what else to say about UAW. I don't think this is going to go on as long as the writers' strike. There's too much on the line politically. Like, there's not the political pressure for an actors' strike that there is for the automotive industry. I think this will maybe a month, but I think it's interesting. The last point I guess I would make is that they're doing targeted strikes, which is very interesting, instead of just blowing out everybody. So they picked 3 specific plants, and they waited until like midnight when the deal ended. So here's the plants. GM plant in Wentzville, Missouri, a Stellantis plant in Toledo, Ohio, and a Ford plant in Wayne, Michigan. So they're going to like rotate a plant, I think, I don't know, every day or every week for the different companies. That's a new tactic, which I think is interesting.
Oh, very innovative.
Well, plus because they have to provide benefits to people striking. So this will keep their funds higher. So they're keeping the strike going, but yet they're not going to like blow out all their resources fast.
Yeah, interesting.
Yeah, because
these union leaders that are like the UPS leader or the Teamster guy and this guy, I'm like, I've watched them talk, and it's like
hat tip.
These guys are planning this out pretty extensively. I'm not going to put Fran Drescher in that category for the SAG.
Too early to say.
I don't know about her, but this guy, he's playing this out, and they went big. So we'll see.
Because I got a Reuters update, but I see that you have Reuters on your tab, so I won't undercut. but I'm sure we'll get to it.
Oh God! Don't forget Signal Group. What?
We all know your massive love for technical analysis.
Oh yeah, I draw dicks on everything,
like a true army vet.
I got mean with someone about TA once. I don't know.
Oh no.
Maybe a little passive aggressive, but I got my Schwab newsletter, and there was a section about technical analysis in the Schwab magazine they send us. I'm like,
Really?
what are you doing? I should just read it to you. It's hilarious. They're like, you have to learn the technicals, and you got to be paid. They just throw all these stupid words out there about it. I was like, you guys never show live trades, and you never show proof of this technical voodoo, but it's off the rails now. So, all right, should we go to ARM? Let's get this back on the rails.
Okay, all right. I'll squeeze in my Reuters update then. Like Reuters, about roughly like 2 hours ago, they said that that talks have resumed again, and I think it's because, just as you mentioned, the UAW is being innovative with their planned strikes, and it's apparently the projections for parts in specific are too tight, and that may be what drives them back to the negotiating tables sooner rather than later. So yeah. Not only with funding, but they're also being very, very tactical and strategic. So this may shake out sooner than we all think. Maybe we'll see.
Yeah, I think I don't know the pension. I don't see them getting their pensions back.
No.
I don't know. Other than that, I mean, everything else I think is possible for them. But I guess we'll see. So
Yep. And here we go, Jesse.
So did you get IPO? You
Okay,
didn't,
so
right? Or
as a learning experience, I registered for the IPO on Fidelity, and everything went through the entire process. Submitted to get shares allocated, and like did the confirmation, everything, and then you just kind of wait and like see if you get shares. And I got an email that was like, due to the institutional interest in ARM or whatever, like no retail is being allocated shares.
no, they literally just said no.
They're just like, no. So as far as like from Fidelity, it sounds like the Fidelity broker at least did not hand out any shares to any type of retail investor. It was all like institutional.
Oh my God.
So it sounds like a decent amount of the larger tech companies and institutions probably got most of that 9.5% float that came onto the market. It IPO'd at 51, so it was the top of the range. There was some like interest about, or some rumors about, maybe they're going to reprice it higher. They just IPO'd it at 51. I think it closed the first day at like 63. I think today it closed at like 60, something like that. And I it was either the first day or today, it made a high of $70. So it's kind of interesting. And me and Bacon kind of did a live stream on it and did a penciled out valuation, and we came to probably, what was it, like $20-$25 a share would be a kind of point of interest. Yeah, so it'll be interesting. We'll see. Like I mean, personally, like I like the business. It's like, not that it's like a picks and shovels play, but like it's kind of like a picks and shovels, but it's like a toll bridge of AI. Like,
I like that. Picks and shovels, toll bridge, all of it. Wait, is this a BOGO investment?
Yes. Buy one arm, get half leg.
I got 2 arms, right? 1, 2, yeah.
So no, like as far as the company, I think it's interesting. I have more questions kind of about the ownership structure. The China business having 25% of the business is kind of like, or 25% of the revenue is a little concerning. SoftBank owning like basically what they took it completely private, so they own 90% now. 90% ownership, and about 10% is on the public market now. So you have a huge company that could potentially be selling or taking more shares in the public market over time. So there's just some things around like the security trading that kind of concern me. Valuation is pretty rich right now. It's trading kind of like an AI company, which I kind of expected it to. Because yeah, I mean, as long as they keep being the go-to for the architectural framework, ARM over x86, they're gonna have like they're gonna have their way a little bit. Yeah, I don't know. We'll see. But if AI slows down, if we see normalization, we'll also see normalization in ARM. The nice thing about ARM is that a lot of the chip makers and companies like Samsung, Apple are all developing on ARM already. So, even if we see customers move between maybe like AMD versus NVIDIA, AMD just started developing off of ARM architecture. So even if we see these players kind of transfer market share, if they're all using ARM on the underlying, it should be fairly stable for ARM.
Mm-hmm.
So it'll be interesting, but I kind of think they cleaned up their finances a lot for the IPO, and we'll see what happens over the next couple of quarters. I think they're going to loosen up on spending, and they're probably going to increase spending. But who knows if they want to continue to sell, like prop the price up, to continue to liquidate insider shares. That's like 6 months out. So maybe they try to keep this clean for a while.
Did you read the section about phantom shares? Did you see that?
Where is that at?
Oh, there it is. There it is.
It's in the filing. They gave phantom shares to the management team.
Phantom shares?
Yes.
Said phantom shares.
Yes.
What's a
all right? Okay, so
what's a phantom share?
Oh,
yeah. Someone can yell at me, but generally speaking, my understanding of phantom shares is they behave like a share will on the public market. It's just that you get if you decide to cash in your phantom shares, it's treated as an expense, as a payable of some sort, rather than yeah. So it's a pain in the ass, and I imagine that every company there may be some like specific nuances and wiggle room that or details that each person needs to consider. But yeah, it's a form of SBC that, and then from an accounting perspective, gets expressed in a different way.
Whoever named it,
so
good for you. That sounds cool.
Yeah, because like
So it
I saw
doesn't.
this in Comcast, I think, or like some old companies where I'm like, huh.
So if I'm understanding this correctly, in that case, would it not actually affect the fully diluted share count? It would actually just be almost a redemption of the share price, and the company would offset the sale.
Yeah, I believe so. So like it wouldn't necessarily affect the dilution. So yeah, like that being, I believe, the yeah, because it's earning per, so earnings would be on the top, and shares at the bottom. So yeah, it doesn't affect the denominator of the fraction, because you never got diluted, but it would ultimately, or it should ultimately affect whatever's on top, because again, it is an expense. It is something that gets paid out.
So you could really think of this as a moving liability.
Yeah.
Right.
Now, how and where it gets parked, I again, I'm dumb. So hopefully we have better accountants in the future here to talk about this nuance.
Employees are granted cash award annually on April 1st. It vests over 3 years.
On April 1st, come on.
Subject to continuous service. The cash amount is entitled to receive if the employee. Okay. Yeah. Interesting.
Yep. So
the number of phantom shares that vest is also linked to certain company strategic performance conditions. So they get cash-based phantom share awards. Interesting.
It sounds like it's just options, but then when the options vest, it essentially becomes a liability on the company and not an increase in share count.
Yep.
That's interesting.
So it's just remember, assets equal liability plus equity.
I was trying to look for the proxy statement because I wanted to see who owned, because like that VinFast was ridiculous. It was like the float when it went public was like 0.9 of total shares. I posted I did a comment on my channel. I'm like, I can't believe NASDAQ allows that garbage. Like a company to list with that small of a float.
Yeah.
So like freaking pump and dump, but you said like 8 or 9% for ARM?
Yeah. So the listed amount was I think around 9.5 million shares at about 100 to 103 million outstanding.
Okay.
Yeah.
And it's in there somewhere.
I know. I just, it's such a pain sometimes because like proxy statement and it's not popping up. So
yeah, so it was like 9.5, 10% of the company was going to be publicly traded.
To start with, that's not terrible. I mean, Kenvu was when Johnson & Johnson first did Kenvu, I think it was 9 or 10%.
Yeah,
was floated, and then they're gonna offer some of the remainder they have to Johnson & Johnson shareholders, something like that. So, yeah, something around 10% seems like doesn't seem terrible.
Yeah, it's not that bad. It's a decent amount. Like, and I think they probably will offer more in the somewhat near future, especially with how much demand there was on the initial IPO. If price is stable, I would not be surprised at all if they took advantage of liquidity from some of the larger tech companies to offload more shares.
One good thing though that I will say is, even though I'm on record as an avoid on this, just watch and learn. Is I believe that this is all just like single share class ownership, so you don't have to worry about like class A, class B, class whatever the hell, and getting burned over that way. So I'm assuming I'm correct still. At least you don't have to worry about that.
Are you from license?
Yeah, I would not touch it right now. I had a plan that like if I got assigned IPO shares, I was just gonna sell them in 2 weeks because I really was like I feel like this thing is gonna be pretty strong off the IPO. I could see it being strong off of the IPO for like maybe a couple months, and then I could see it just like downtrending for like 2 years. Yeah, I'm not really interested at this type of valuation. I think there's other companies out there that I'm way more confident in. But if it got down in the 20s, like, yeah, man, I would definitely start taking a really, really deep look into it. And
it's a British company.
What was that?
It's a British company. I thought it was from Hong Kong. I don't know why. Never mind.
Yeah, the PLC part always throws me off.
I was like, oh, okay. It's not that.
But yeah, so if it gets into the 20s, I'll be a lot more interested as far as like,
oh boy,
if I actually want to establish a position.
This must not. Is this right? PE 125. I mean, this stuff doesn't always work out when it starts. Okay,
no, it's pretty. I'm pretty sure it's right. Right? They their market cap right now is around 60 billion, and they took in about 525 million in net income.
Oh my god!
Right?
Holy smoke!
Now the interesting part is like, since all of their revenue is essentially royalties and licensing, their gross margins are like 96%.
Yeah,
like
gross margins are insane.
And their net, I think their net margins are around like 20% right now, something like that. So I mean, there's definitely like a bullish case where you could say that, as they scale up or they increase their licensing and their royalties through additional AI adoption, their R&D and SG&A might not increase at the same rate, so they could go through some bottom line margin expansion.
So what's their?
I'm
What's
just like,
their? What are they selling you? Because they're already in smartphones. Is the idea that they're going to get into data centers because they have more energy?
they already
efficient-
are.
Yeah.
So like NVIDIA builds off of ARM architecture.
Okay. So their idea is
Apple, all of Apple's new MacBooks, the M1 chips, the M2 chips, M2 Pro, M2 Max, those are all off of ARM architecture.
So their chips are more energy efficient, so they run at cooler temperatures, right? So you'll have
that's the thing though. It's not actually their chips, right? It's like the architectural standards at which the chips are designed. So it's like it's almost like the framework for how to build off of the ARM architecture, which happens to be a lot more power efficient than x86. So all they pretty much have to do is focus on keeping that edge on the base architectural framework. And yeah,
wow,
collecting
63% royalty rev. Wow.
Yep.
Yeah.
Damn.
Putting royal in royalty.
Damn.
Yeah. So here's
wow,
an
this
interesting.
Okay.
Yeah, this is a really interesting chart because it goes through the kind of like
yeah, I like how they coded
the different segments of like ARM architecture v1, v2, v3, v4, right? And you can kind of see that like every time a new architecture like framework is like updated, they usually have like a pretty steady usage in a steady royalty stream for the previous one, but then everybody starts developing off the newest one. And that's why, like, I think somebody was asking if what was it, if they were gonna have a patent cliff. And this kind of, from what I can tell, kind of prevents a patent cliff, right? If you're introducing new architectural updates every couple of years, right? You're never really going to run into a long-term patent cliff. You might run into like a long-term patent cliff on like your like really old designs, but as long as you're having steady adoption into the new architecture updates, they should remain pretty stable.
Yep. So what you're saying is royalties over loyalty. That's such a bad logo.
Oh man. Performance of ARM China. Ooh, dun dun dun.
Dun dun
Yeah.
dun.
That's the same issue Qualcomm kind of has.
Yeah.
Same issue Lam Research has. You have significant business in China. That was why I kind of didn't do Lam Research. I did KLA, but Lam Research ended up performing a little better than KLA so far. But I'm still happy with my play on that. But interesting.
So I mean, if we saw a normalization in the AI spend and it sent the entire market down and ARM just got destroyed, I would seriously consider opening a position, assuming that they were still keeping their like edge over x86 Intel, whatever Intel's coming out with their pipeline.
What do you think of this comment? Intel finally getting interesting.
Intel was interesting when it was at like $25. But yeah, I mean, it is like, it was beat down.
Yep.
For sure.
My problem with Intel, they got to pick a direction. They're trying to go after every business, and it's like,
yeah. I mean, they were just absolutely destroyed.
You're going to build GPUs. You're going to build fabs to work with like Taiwan Semi. What else are they trying to do? Oh, they're going to build AI chips in like 3 years. It's like, to me, I'm looking at this. I'm like, pick a direction, Intel. Like, what?
Yeah, I think I was buying some when it was under 30. I want to say I got like 26 or so, and then I ended up selling it at like 33 for something else. I need to just hold on to whatever I buy. That's what I'm working on currently. It's like,
this guy hates he hates it. Let's see. IPO Kitchen. He says smoke, but no fire.
Plenty.
Wait,
Oh,
you're doing the
snap.
wrong puns. It's not a kitchen. You got to do an arm pun or something. Oh,
Dang, 10x oversubscribed. So that means they could have sold off the entire stake.
oh no.
So, and this is the other thing that I was like, I'm pondering, right? Because allegedly, a lot of these large institutional or a lot of these large buyers of our IPO are Apple, Nvidia, Microsoft, right? If these companies are so entrenched in this architecture that they're like, we gotta freaking scoop up shares and have ownership over this, if they are buying that much, it leads me to believe that they really are super dependent on ARM, and they think that's going to be the long-term architecture.
Mm-hmm.
So
Interesting.
I don't know. That's why, like, I thought it was super stupid, honestly, when it first came out. I was like, oh, I'll read through this prospectus and everything, and like the other document you had up, I read through that a decent amount, not everything because it's like 400 pages or something, but I started looking into it more and more, and I was like, shoot, I kind of like this. Like the business, I kind of like. Yeah, I don't know. And I think they just negotiated the 4 or 6 year contract with Apple.
Yep.
Yeah, I saw
Something
that.
pretty long.
Yep.
Yeah.
They locked that up as
So,
soon as the company was going IPO. They announced that deal. Oh, is this one of those companies you just never get to touch, like in the market?
well, so, and this was like, I think we were in a private call with some people, and so one of the things I said was like, this could be one that I could just see that trades at a really high premium for like a long time, like a long time. I don't know. So I'm gonna probably give it at least a couple quarters, see how things shake out, and then maybe it is something I just like slowly position myself in. I don't know, but it's hard to justify. It's hard. It's hard to justify the valuation.
Yeah.
It definitely would be one that would be on my radar if we do go through that AI cycle normalization. Like, yeah.
They're the only comparable I can think. I looked at this so long ago. So this company is a royalty company also for OLED technology, royalty based. I remember we looked at this like I think this was a year ago, sometime in Discord. Apparently I should have bought it though because it's up 50%. I think when I was looking at it, honestly, I think it was like probably under 100. So, but this is another kind of a comparable, I think, because they're mostly royalty based. They sell they let like TV companies and monitor companies make OLEDs, and they lots of patents. So I don't know. Jesse hates it. He just ran away.
Well, I was gonna ask, do they like kind of one of my concerns with that would be like, okay, like how long are their patents for, and are their patents refreshed? Or is it just like they have the OLED patent, it doesn't really get refreshed?
I tried to look, and it was like 100 patents for like all sorts of different pieces of the technology. I'm like, do I really want to bother? There's so much work to look at, so much work to look at a company like this. Like, and how the hell do you value technology patents? And
it's very hard.
It's like I buy tractor companies and companies that open boxes that sell tools. So unlike Paul, there are companies beyond your abilities. Like, everything Money Paul would tell you, every company's the same. And
no.
Value.
No.
Well, I mean, that's why Intel was a good deal at $60, right?
Yeah. Ooh. Let's see. Oh, Sam is in the building.
Yeah, he's been able to expand his meme farming, manufacturing, and refining process. He can process multiple streams at the same time.
Yeah.
Yeah.
I mean, there is. It's just like Disney to me. Like I can see a path that Intel would do really well in. It's just a matter of valuing, putting a percentage base or risk analysis on them actually doing it.
Yeah.
I think AI chips, I think they've already lost. I think they should just stop. I think the development of GPUs, Intel has never been able to produce a good GPU. I think their fab idea and making lower quality chips maybe domestically could work. I think it's the path, but they're not going to build these fabs for another year or two, get them online. So I've got plenty of time to look at it. The New Mexico and the Ohio plant, but
they can rebrand to Dollar Chip General. They'll be like, they're almost expired. You just gotta use them real quick.
But I don't know. Oh no.
Man.
Not ARM.
Oh, hey Dan, did you have you gotten back into Alta?
No.
No.
I did not.
Okay.
Did it go up
you
again?
kind of inadvertently took that for a swing trade. I
almost timed top and bottom on it actually.
Yeah, dude, you got it pretty good.
I got out at like 470. Yeah. And then I didn't even know what happened after it till someone told me it got down to like 410, and I was like, holy shit. Like I saw Everything Money do a video on it. They were all like super excited about it, but I don't know. I struggle. I have a lot of retail. I don't know if I really want more retail because I've got Home Depot, Tractor Supply. What else? Yeah, I don't know. It might not be for me, but there could be something there. But Amazon, like this is, well, it does check mark my first box. I think it's a defensible business against Amazon makeup, actually. So I don't know. Slurpees. How is everyone feeling about if you were buying now, then in 5 years you're showing your O face or your O face? The thing with like I told Bake, like I'm basically getting out of most of my REITs, or I don't buy more of them anymore.
Yeah.
I don't think they're worth the trouble. I think you can do well in them, but I just don't think they're worth the extra trouble beyond regular equities to me.
They're just so big.
They're just different rules. You have to different valuations that you have to develop, and your models have to be different. And if it interests you, like Jesse gets interested, he just leaves when REITs are coming on the menu. This concerns the hell out of me. Realty Income.
Yep.
They really spiked their share dilution. That's very concerning. And I don't think the market really likes the Bellagio deal that they just did.
Jeez.
Because this is something they've never done before. This is not what I actually did talk to Fabio about this briefly at one point, because I said to him, I'm like, I agree with him that REITs get to a certain size and it's like, did he leave?
Yeah, Jesse had to leave for something or other. I didn't get the memo, but yeah.
Like at a certain point, they do get so big, it's like they have a hard time finding deals that even make a difference. And I agree. Like I thought was it Verit, the one they bought a year ago. That last purchase, I thought that was not a great purchase. They had to spin off a bunch of office stuff into that Orion REIT.
No,
so I thought that was a weird investment by them. And then this isn't what Realty Income does. Like they don't buy freaking casino, and they're not even buying the casino. They're buying like some weird, the way they structured it, it was very confusing. I think it was a mix of like debt and shares, and they're sharing with was it Blackstone? So I don't know. I think they're struggling to find deals that are tenable for them. And I don't know. I said to Fabio, I'm like, would they be better if they just cut the company in half? If they want to go into like casinos and stuff, I feel like you could split their business in half and have the more conservative business that are cash cows, like the gas stations and the stuff they grew, that really made them who they are. And then maybe something more like exploratory of a REIT, trying to go into maybe like Vegas or something like that. I don't know.
Yeah.
But
5
I see
years.
people like, oh, look, they'll go back to 70 at some point. I'm like, I don't know.
5 years is a
I've never owned this. I've never owned this. I had a small stake in Agree Realty. I've sold some of it. I have Cube Smart. I had WPC for a while. I sold that. I have Vornado, but it's only like $1,000, so it's whatever. But I don't know. I don't find them interesting at this point necessarily. So
like, assuming that like if anything changed, it was like really really small and along the edges. 5 years, I could see this being okay-ish if we consider total return. If you're thinking like share price for 5 years, that's a lot of time to ask for. I have no clue. I have absolutely no clue. But total return, maybe, but yeah, not for me. Not for me. It's just so big. It's just so big. That's
so like they're gonna have to go into different properties like this
yeah.
casinos and maybe entertainment venues. They're
Yep.
gonna have to go into Europe, which you can see they're
Yep.
starting to get into, and
Yep.
like the growth from today. I don't know. It's tough.
Yeah.
I think Agri is a more interesting real estate company. I like their holdings more. The types of real estate they have.
Yeah.
Agri, like, I don't like all the gas stations Realty Income has. It's always
Mm.
bugged me.
Mm.
They have a lot of gas stations, and I don't know. It's not what I want to invest in. Musa guy just left. So.
Yeah. That being said, though, like with Realty Income with ticker symbol O, I am not shorting this though.
No.
Yeah. They're just
Well, like this one guy
I'm
said,
just sitting on the sidelines. Yeah.
It's not an issue. Like, yeah, their cost
Yeah.
of capital and they're the
Yeah.
gold standard in
Yep.
REITs. So
Yep.
I'm not. I'm just worried. Like they have to find.
Mm-hmm.
They got to find just to even move the needle big deals at their size, and I don't know how I think they're going to have trouble finding the deals that really make a difference at their, what are they, 40 billion market cap?
Yeah, something really big.
Like Agri's still at a size where they can still move the needle on certain investments. And they're still founder or, the family still runs it. So guess we'll see. Oh boy.
Yep.
I'm getting, I
don't
know where,
pinged. All the pings.
I don't know where my Discord tab is. I can't find it. Oh no, where is my Discord tab? Shit, I can't find it. All right. Well, I think we're pretty done, unless someone has anything else. So
no, only recent comment that I see is Dex's new ETF mention.
You're gonna buy cows?
I'm not saying to do or not do, but
has this become me? I have become cows, the destroyer of worlds.
Become one with the dairy cows.
This is so funny to see it. Like, I don't know. And they've wrapped their whole brand around these high free cash flow yielding, investment opportunities. They take this one model, but then they just slap it into different benchmark indexes. So the one I did had the Russell 1000, but then they have one with, they just, the methodology is set in stone now. They just can slap it on a different benchmark, add another cow ticker on it, and off you go. So, but I think like I said, if I'm gonna research an ETF and show it to everyone, I'm gonna cover the methodology, but then I want to try and find, is there any academic research or papers at all to validate what they're doing at all, even close. Like the paper I showed is not exactly what they were investing in, but it was to the point of, okay, maybe there's an ETF that looks at free cash flow growth projections as part of their investment methodology. And it's, but the problem is you're going to be active. You're probably going to have an active manager to do that. So you're going to pay a higher fee. But if I could find that, I'm not actively looking for that, but that would interest me. Probably more than cows at this point. So this would maybe be something I would throw like $2,000 in my Roth at, just for shits and giggles, honestly. Because I wouldn't mind. I might buy Moat. I could see buying Moat in my my Roth, honestly.
Yeah.
But that'll be the next one. So I need to find some papers on Moat because I want to talk about Moat for a while. Because everyone talks about moats. Like it's we always joke like the moat of a moat, but not every business has a moat. Not every sector and industry has a moat. I don't know what people assume that somebody has a moat in every business, like type of business. No, but then moat is like a weird term. Like you have a moat until you don't, right? You never see it. Like I've said before, I don't think Adobe has a moat. Or it's if they do, it could be gone really quick. A company like Adobe, but you could argue, does Caterpillar really have a moat? Because some people would define a moat as having defensible margins.
Yeah,
I don't think Caterpillar really has defensible margins in the way you think. They can't just raise prices, which they've shown during COVID they couldn't.
Yeah,
they just had to absorb losses, so they don't fit some people's definition of moat. So it's tough.
It is. But that being said, though, like a company like Caterpillar, though, to build heavy machinery, like naturally to build something big, you need something almost always big. And that usually comes with large price tags. And some might say, well, not a true moat, but that large capex, moat-ish.
Yeah. There's something, but it's like, okay,
fair.
we can't say moats are like defining companies that have moats as garbage, because I've seen it does outperform.
Yeah.
So moat outperforms. So you can't make fun of it to some degree. Like it is working, whether you think it's a joke or not.
Yeah.
So people defining moats, because it's not passive. There's no passive moat. A person is saying this company has a moat.
Yes.
And you have to say, I like your, I agree with you. I'm going to invest. So.
Yeah. Or I am not, and I am sitting on the sidelines. Or shorting if you're degenerate, possibly, maybe. Hard to say.
I mean, you buy Jet. You want to buy Jet?
Yeah.
Follow Mo and Jet. Go for it, dude.
I'd rather throw my money at cows than Jets. That's just me personally. I'll eat the expense ratio. You put a gun to my face and say, pick one of the two. I'll take this higher expense ratio and just cry.
Oh my God. Fabio said something. What happened?
He's yeah. Oh, okay. He wants me to show you the thing.
Oh my God.
Yeah. Hold on. Let me. Gosh darn it.
No, I'm reading what he sent me.
Oh, okay. Is it a YouTube comment?
Yeah.
I don't know if you want to throw that one at your.
No, I don't want to show people. No.
Okay. All right. That's fair. That's plenty fair.
Wow, this guy's very specific.
Yep.
All right. Well, if someone wants me to review an ETF, okay, first, it's got to be interesting. It's something I can research academically. So there has to be something in the methodology that's interesting to look at. Somebody sent me one that was like a small cap. I'm like, there was nothing to look at. I'm like, why would you buy this trash? But anyways, so. Oh, man. So I think that's it. Any parting words?
Sorry, just responding to things. Parting words. Thank you for having me. Like, this. Geez, we really covered a lot of ground on this.
Yeah.
I hope you had a fun time. I hope Jesse had a great time, and you, the viewers, especially.
Yeah, he got plucked, I think.
Yeah, I think it was spouse related. No, it was not.
No,
it was not that. Yeah,
it's very specific.
Yep.
About I don't know. I don't want to say.
Yeah.
Slurpees, you're not in the Discord, I don't think, unless you go by a different name. But he's like, I love this trivia Discord jump.
But yeah.
Slurpees is the moat. He is the moat of moats.
Yeah, like you already beat me to it. You already covered what you got in the works. So this will be fun because I know that moat will definitely be interesting. I'm interested. Not to try and like overhype things. And I think there's a scheduled Andrew Marshall live stream coming up. That
tonight?
One, not tonight, but like with you. Like,
Oh
down the
yeah.
road. Yeah.
I just put a placeholder for now.
Yep.
But
Oh,
yeah,
okay.
it's probably gonna do that. And
Okay. See, there we go. Value for the viewers. We know it's a placeholder now.
Sam asked me a strange question about my real estate agent coming on. So
Oh, yeah.
I'm in the works with that one. She's she has a presentation, so I gotta try and see what she wants to present.
Oh, okay.
But
Ooh,
it's like she's very serious about her job. Like, so I
yeah,
don't know
certainly.
how jokey she is. So
Yeah.
but she's a killer though with real estate. Like I'll never go with anyone else. Like she's killed it for me. That's all I'll say. So yeah. She looks not she's all nice and innocent person, but she's like behind that veneer. I don't know if you'll see it if she talks, but she's real like a lot of real estate agents. I interviewed like 5,
Yeah.
right? And they're all just a bunch of part-time. There was like 3 that were like part-time elderly people that just did it to meet people.
Mhm.
And then there was like this really chauvinistic asshole that
Oh,
I almost threw out my house. I couldn't stand the guy.
jeez.
My wife's like, she's like, you looked so mad when he was talking, but he was just like Mr. like Sigma Alpha Bravado.
Oh,
I
fucking
I
hell.
can't deal with you. I can't like even look at you. But she was the first person that just blew me away. Like she was in my friend circle. So I was like, but I wasn't necessarily going to hire her just because I was friends of her friend. But she came in fucking presentation, just nailed it. But she could probably tell it better than me if she comes on. So that's a cutthroat business, though. I'll tell you.
Oh, yeah.
Real estate, people think, oh, it's you show houses and make money. I tell people, I'm like, you're up against, because there's been some people that ask me about real estate. I'm like, you're up against my real estate agent. And I'm like, I'll try and be nice and be like, she will destroy you and take your lunch. Like, you're a nice person, but like she's out all the time, just meeting people. Like, because you have to network.
Yep. Oh,
Well,
yeah.
I don't want to. She can talk about that, but like the networking she does, I mean, it's impressive to me. Like, I couldn't. I'm not made for sales.
No. Neither am I. Like, I need to legitimately believe in the product, and then I need to do it in my way. If that makes sense. Like I'll receive training, and I'll follow with the training. But like, how like there are like high intensity salespeople, and then there's more laid back salespeople. Like,
Mhm.
yeah, if I were to do it, I'd be more laid back, is what I'd like to think. But
I was never built for the sales
yeah,
life.
yeah,
It's
yeah.
not
Like
me.
I gotta believe in
I
the
was
product.
built to be a civil servant.
Yeah.
That's all I'd be. So
That would be the I need to not starve choice for me.
yeah. Hey, we can all make money in the markets. All
Oh
right.
yeah. Yep.
So buy all your money in cows, people.
Not sponsored.
That's total financial.
Don't do it. Don't do it.
Well, watch my video if you want. I also did one on DGRO.
Mhm.
So these are fun. I like doing ETF reviews. Everyone
Oh,
does
yeah.
stock reviews online. I'm like, no one talks about like you can have a core, you can have some potential market beating returns from ETFs.
Oh yeah.
So you have your core holding, and then maybe you have some satellite ETFs that
Mhm.
maybe you
Yeah.
take a shot at, and they have a shot at a little bit of outperformance, and
Yep. Yeah.
and you're not so stressed out probably.
Oh yeah. For sure.
But yeah, yield max. I really want to cry. I don't know. I go back and forth because I don't want to be so negative. I want to be positive, but
Mhm.
like the Jeppy yield, like
Oh
I
yeah.
see it coming. Jeppy has been
Yep.
such a hit. You're seeing it now.
Yep.
You're
It's
seeing all the other option
put
ETFs come
selling.
now. Yield max. There's also now another one. I'm not going to say its name because I don't want anyone to look it up. It sells degenerate option contract. That's the ETF's methodology. And this is what they do, right? They find a hit ETF and then other people copy them, other ETF managers. It's just terrible. So that's coming. It's going to keep next year or two. You're going to see more and more option based ETFs. It was just such a bummer. Yeah, I know. There you go. You
Yep.
found it.
Yep. 0DT.
I don't even know what to review. Like, oh, do a review. I would just like look at it and I'd point at you and I would say, don't fucking do that.
If you ever made shorts, that would be it.
Yeah, this is a short. I just do a short review and be like, why would you buy this?
Yeah.
Why would you buy this? Like, what is wrong with you?
Yeah,
What
YouTube
happened in
Shorts
your
is
life
quicker.
that made you buy this thing? Oh my God. But the yield of it, man, 50, 60% dividend or something. Okay. Yeah. But all right. Well, we will cut this because I'm running out of definitely enjoy the
Yeah, there we go. There we go. There we go. That's what
It's
matters.
just like dividend investing is boring. Like I don't know what to talk. Like that's the problem with dividend investors on YouTube. It's like there's not much to talk about unless you want to buy and sell stuff you probably shouldn't have, honestly.
Mhm.
But it's about holding. Like I said, I've been buying an ETF and then my 403b. The only single stock that I got added to my long term was Cigna. So anything else I've talked about this year was just like trades with my small investing spec account. So whatever, it's all good. But thank you for watching and we will see you later, people. All right.